Hey guys, Joel Franklin, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you an update, and we're going to be taking a look at some of the key events that are coming up this week and how they could affect things, basically. The first thing to probably say is that we're seeing some minor risk-off flows at the start of the week. You can see here that the S&P 500 is down just over 0.5%, back at that 4,000 level, after again rejecting its 200-day moving average, and again failing, for now anyway, to test this downtrend that we've been talking about for quite some time. Although, as I'm going to talk about later in this video, there's still the possibility that we could be testing this level in the days ahead. Oil as well getting battered and reaching new lows actually for the year. Yeah, just about for the year. WTI there in the 74s, or well, under 75, which I think is quite a significant break. And we're going to talk about what's going on in a second, but I think there's every chance that we could be falling down to the low 62s, this area I've been talking about in the last couple of weeks, between now and early next year. So what's been driving the moves this morning? Well, the main focus is on China at the moment, still at the moment. We've got record coronavirus infections in China. It looks like they're finally losing control of this virus. But to complicate things, you've got mass protests across the country now, against the zero COVID measures. Basically, people are just getting sick of it, which is not surprising, really. It's been nearly 3 years worth of these incredibly strict measures that have been going on and off and on and off in China. And more specifically to US equity markets, there's some reports about how these measures are affecting production of iPhones. So that's causing a bit of downside in Apple shares. But more generally, it looks as though it's a complicated situation, because if China does finally lose control of coronavirus, then that might spell the end of its zero COVID measures, which ultimately might be a good thing for its economy. However, if China loses control of the virus, and it does become endemic, China faces a very severe health crisis because, first of all, they've got an old population as it is. And second of all, the elderly in China aren't as well vaccinated as they are in other parts of the world, because there seemed to be this confidence that China was just going to be able to stop the spread of the virus anyway, so why get vaccinated? And the other thing is, the vaccines that China has been using, the Chinese vaccines, they're not as effective as the ones that have been used in the West, for example, like the Pfizer vaccine. So this health crisis could get very, very bad in China, and it's very unpredictable as to how authorities are going to respond. Perhaps they double down and even go stronger on the zero COVID measures. Um, Perhaps not. Perhaps they relax and just accept the death toll. But there's a lot of uncertainty at the moment, and pretty much everyone agrees that whatever happens, it's going to be bad for the near-term outlook for the Chinese economy, which obviously is one of the biggest oil consumers in the world, which is why oil is getting battered. Um, in terms of what else has been going on this weekend, not really too many updates out of other countries to be talking about. Let me just show you currency markets real quick as well. Currency markets, surprisingly, the dollar hasn't actually been gaining off of this China story, which you might expect it to, because it is typically seen as a safe haven currency. But we are finding support at the 200-day moving average for now. But we've got some events coming up this week which could see, or at least I think anyway, the dollar breaking lower. Let's actually look at the calendar here. I've brought up the Bloomberg one because I actually like it a little bit. It's a bit more simple, and they tend not to miss off important things. But we've got plenty of Fed speak this week. In fact, Fed speak's probably going to be the most important thing. Williams, Bullard today, then Lagarde as well today. Plenty of ECB speak this week as well. But the main thing this week is Fed Chair Powell's speech on Wednesday, which of course comes ahead of the Fed meeting later this month. And then there's other Fed speakers as well this week. Bowman on Thursday, Evans on Friday. But we've also got some important US data US payrolls, the official jobs report for November. November being about to end in the middle of this week. That's out on Friday, and we've got US manufacturing ISM PMI out this week as well, and other jobs reports that come out in the lead up to the official jobs report as well. In fact, let me get you on the like JOLTS on Wednesday, ADP on Wednesday. Those will also be quite important, I would think. And then you've also got the core PSE price index as well. Obviously, US inflation is very much in focus. And actually, the core PCE price index is the Fed's favored gauge of inflation. We've been having downside surprises recently, which has been one of the key reasons why the dollar has been falling. So let's see if that can continue. I think there's every chance that this week the dollar could continue to head lower. Why am I saying that? Well, I think these first of all, these Fed speakers are going to not double down, but they're going to reiterate plans for slower rate hikes ahead, which I think Powell might signal as well. So it seems as though peak Fed hawkishness is in. And then I think also the data is going to be in fitting with the idea of US inflation having peaked. So this core PCE data should show the same. And while Thursday's JOLTS data, I think, is going to, I mean, look, we're expecting 10.36 million job openings at the end of October. Still going to show that labour demand remains robust, but the data on Friday should show a slowing in hiring, a slowing in wage growth, and unemployment rate still expected to remain at 3.7%, but the trend is towards the labour market softening ever so slightly. So all of these things sort of add together towards the Fed not needing to be quite so hawkish, which could mean that the dollar could continue to head lower. And ultimately, that could also be good for stocks, which is why I'm still thinking that there's the potential for us to potentially end this week testing this downtrend. I wouldn't be expecting a massive break above it just yet, but a test of this downtrend, I certainly think is possible. But anyway, guys, those are some of the main things that I'm looking at this week. I hope you all enjoyed the video, and I will see you all in the next one.